Ronald, come and join me here. Jordan, I'm going to ask you to come up as well. Ladies and gentlemen, it's always a good time of the evening to just allow you to ask questions from the audience of our two presenters. Of course, Jordan, you'll be able to ask a question of next week, but Ronnie Stoeferle is only here tonight. I thank you for your presentation.
Thank you very much.
Sorry we had to rush you a little bit at the end there.
I'm sorry.
But it's absolutely fascinating. I've got a couple of questions, but let's see if we've got any questions from the floor. I can't believe no one's got a question. We've got one down. Just if you could wait for the microphone, which Hannah is quickly whipping towards you. Just here. If you could put your hand up so that she can see. Thank you.
I was just wondering if there are any comments on the silver market.
I don't cover silver. From my point of view, you have to be able to live with the volatility. It's that easy. It's much more volatile. Silver outperforms gold in rising inflation. So if your call is deflation, you probably should be rather long gold than silver. If you say inflation will rise, then you should perhaps overweight silver compared to gold. But it depends on your preferences. But if you can live with volatility, I think you should have a decent allocation in silver as well.
Gentleman just towards the back there. Hannah, we got a microphone? Yep, microphone coming to you.
You talked about the financial repression with precious metals, and in Germany they've introduced a 19% tax on silver. In the short term, what kind of effect do you think that's going to have? And in the long term, do you think that the central planners will be overwhelmed by that? Thank you.
The immediate effect was that Austrians went over the border to Germany, and when they came back over the border, their cars were like much lower because they bought many kilos of silver, so that's gone now. I think it's just one part of the puzzle, but you can tell that if I would be a central banker, gold would sort of be my natural enemy. So as I've said it before, I don't think there's going to be a real confiscation of gold, but they're probably going to make it harder to invest in gold, and it's easier to make like some sort of a tax on paper gold, obviously. Like Jim Rickards, that I really enjoy listening to, he said there's going to be some sort of revaluation up to $10,000 US, and everybody was really excited. And then he said, yeah, but then there's going to be some big tax on those profits. So I think that perhaps it's already discussed on really high levels, but I talked to Austrian central bankers, for example, about gold and what they're thinking about gold, and they said they basically don't care. They said, yeah, it's just sitting in our vaults. The Austrian central bank, they leased out quite a lot of our gold, and they said they made 300 million of profits leasing out that gold within 10 years. So it's just sitting there, and I honestly think they don't really care about it yet.
Yeah.
Jordan, can I ask you to comment?
Yeah, I'd probably make 2 points on it. One, I think they care a hell of a lot more about what happens in the bond market than they do in the gold market, and they will for some time to come, because that's I guess, the ultimate measure of confidence in the monetary system, in government's ability to control the crisis as well. Regarding the point about taxation in Vienna though as well, it's not just there. Obviously everyone would know that in India this year they've come up with 15, 20 different policies to try and stop Indians buying gold. It's probably going to be as successful as trying to stop Americans drinking booze during the Great Depression. But what that's actually led to is just an explosion in the amount of smuggled gold coming into India, the amount of Indians flying outside of the country, especially into Dubai, to get their hands on it. So people will always find a way to get around government legislation, especially if that legislation is being enacted to basically, undertake financial repression. So that's my take on it, that's for sure.
Gentleman just down here, put your hand up.
Thank you. Quick question. So they want to make it harder to acquire the metal. As you were saying, they're going to put penalties on it, etc. Number one, does that then drive the price up? And secondly, for those who already have the holding, does that have a grandfather, or is it protected from those penalties if you already hold it?
I got no idea how they're going to make it. And I honestly think that it's not really a big discussion at the moment. But if gold goes really parabolic, if there's gold rising to, I don't know, a few thousand US dollars, and everybody will lose trust in the currency, and they're just selling off dollars, selling off bonds, and pile into gold, then it will become serious. But as Jordan said, people are really creative when it comes to avoiding things like that. I told him yesterday, there was a guy from the Soviet Union. He said he was allowed in the Soviet Union to hold golden wedding rings. So at the end, he had like 50 golden wedding rings, and he went to the markets like every few months, and he had huge purchasing power. Yeah, there's stuff like this. It happened. Yeah, and if you talk to like the generation of my grandparents, yeah, they've got. I think their fear is much bigger because they had 2 currency reforms. They basically lost everything. So for their sensibility when it comes to such issues is much bigger. But how it turns out concretely, I got no idea. Yeah, but I think it's not time to think about those things. And in Austria, for example, if you buy physical gold for 15,000 euros, you have to show any ID or anything. Yeah, so yeah. I think I always say, when it comes to gold, if you want to really buy gold, because as a monetary insurance, buy physical gold. You shouldn't buy any certificates, ETFs. They're not really backed. Just go for physical gold.
Yeah, I think as well, like everyone's obviously heard about what happened in the US and gold being confiscated, but the reality is you dig a little deeper and you read a lot of stories, and people were able to turn, if you've got a little 1 ounce ABC bar or one of our new half ounce ones, you link a few of them together with a chain around your neck. Great plug, wasn't it?
Great plug.
But you'd link a few of them around, with a chain around your neck, and all of a sudden you've got a piece of jewellery and not a bar that you need to hand over to the government. So again, it just comes down to the fact that if and when we get to a stage where that's a real consideration, people will be able to find solutions to these kind of problems.
Yeah, just make gold shoes. Gentleman just at the front here, got a microphone.
This question's for both of the speakers. My family and friends are very unconvinced about this sort of viewpoint. I was wondering what you would say to someone, an Australian, who thinks that you're not going to have these sorts of problems in Australia. Australia's a special place. The Sydney property market's very special. Prices are never going to go down, etc.
Yeah, well, I think in Ronnie's speech he used a quote from Sir John Templeton, and which is a fantastic one about the nature of bull and bear markets. My favourite quote from John Templeton's the one that the 4 most dangerous words in investing are "this time it's different." And if you think of I guess the global sort of financial crisis and the problems of too much debt and money printing, it's understandable why we all hope that it's going to work out okay. And because Australia sort of largely skipped Mark 1 of the GFC, or round 1 of the GFC, it's understandable why there's perhaps even more sort of hubris or just comfort in this nation than what there is in other parts of the world. But I mean, the facts are not to be denied. I mean, what I talked about today in terms of the Australian economy, that is the real state. It's not pretty. Let's hope things don't really get a lot worse. But protection is pretty important. And I think your final quote. If your family and friends that are thinking like that, if they have gold, yep, they have it because there'll be a little bit of fear. But if they don't have gold, they could be in danger if things get a little bit hairier with the economy.
Yeah. I'm going to make this the last question, just in the interest of time. So we'll take yours as the last question, sir.
Just a question to both of you guys up there. Jordan had a hypothetical portfolio of $325,000. And I'm just wondering from both of you, how much of that should be invested in gold and perhaps silver? And what do you see as the difference between silver and gold in a portfolio? So, yeah, how much should be allocated to metals? And what should the split be between gold and silver? And what is the difference, just in your view? Thank you.
Can we flash a disclaimer up quickly?
There's no advice being given, George.
Yeah. You want to go first, Ronnie?
Yeah, I honestly have to say that we're currently starting up a fund business in Liechtenstein, and it's highly regulated, so we have to deal with compliance and risk management all the time. And I want to refuse to answer this question because it really depends on your age, on your wealth, and your Yeah, your investment case. I think that you should be overweight gold in this current scenario, whatever that means. And I think people are, it's a highly emotional topic. So when I'm holding speeches, it's either gold haters or gold lovers. There's nothing in between. But I'm thinking from a just rational point of view, if you have a look at the numbers, the facts are on the table, and we can all pray for wonders, but I don't think they're going to happen. So in this dire scenario, you should probably be overweight gold and silver if you can live with volatility. But what that actually means in percentage terms for you, if it's like 25% or 40%, yeah, please understand me, but I have to refuse to answer.
Yeah,
Bit of a tricky question, I think.
What's that?
Bit of a tricky question.
Yeah, it is. I mean, look, I guess back in April when we spoke, we sort of did do a portfolio example then, and we just sort of said, well, look, based on, you know, historical trajectories, this is what might happen if you had, you know, 25% of your portfolio in gold versus if you had none of it. And that was just an example. It was most definitely not a recommendation. I guess the thing is, there's a lot of people that obviously they see presentations like this and they've cottoned onto the risks that are in the economy and risks in traditional investments, and they look at it and they think, well, actually, I really don't want any of my money in more traditional investments and I want to put it all in gold. And look, whilst I can certainly say for myself the lion's share of my wealth is in gold, you know, I've got a 30-year view with my self-managed super fund, so I can take time with that. I guess the most important thing is that the message that we're trying to communicate is that considering the risks, you really need to protect your portfolio, and gold is a really, really great way of doing that. But I can also, you know, say that you don't want to go from trading risk with the stock market and the bond market into all of a sudden stressing out every night on what happens with, because you've got to put all your money into gold or all your money into silver. So, you know, if you can get through the next 10 years protecting your wealth, you're probably going to do better than most people, because I think most people are going to lose wealth in the next 10 years. And a healthy but not over, you know, a healthy allocation to precious metals makes a lot of sense. But yeah, what that number is, it really depends.
It's all about balance, isn't it, Jordan and Ronnie? Could you please thank Jordan and Ronnie Stoeferle? Thank you very much. Yep. I know that I cut the...
I have to ask about the coin. I'd
You
love to have it back.
Well, I saw it. It was leaving just before.
Oh, okay.
They got through all the security.
Okay.
It's gone.
Okay.
It's gone.
It was probably
Get over it.
a New
Get
Zealander,
another one.
right?
Yeah, it's a New Zealander.
Yeah.
Clearly. You know what New Zealander stands for, don't you?
Yeah.
Kiwi. You know what a Kiwi is?
Yeah, that's the bird.
Well, that's what they call New Zealanders.
Yeah, I know.
It's called keen interest without intelligence. I didn't realise. Hope there's no New Zealanders in the room, but never mind. Have we got the coin? Please put him out of his misery. Jordan's got it. You'll never get it back now. Look, I just thought I'd finish with just a quick slide here, because one of the things, you know, ABC Bullion do work with a number of partners. I myself, I have a self-managed super fund. I've bought gold through the self-managed super fund. 2 years ago, I didn't actually have a clue that there were certain tax breaks in doing it that way. We all know that the self-managed super fund industry is growing quite substantially. It's a way that I use it to protect my wealth. Obviously, you buy through ABC Bullion because they've hosted you this evening and put in these great speakers. And in fact, I actually store the gold at custodian vaults. And Janie mentioned before, I would urge you, if you haven't gone down and had a look at custodian vaults, it's right here in the city on Castlereagh Street. It's phenomenal. I think it's great. I go in there and pat the gold and leave again. But it's fantastic. And I'd just like to say my thanks to Janie and her team, who do such a great job. Their customer service is second to none. And for those of you that didn't get a chance to ask a question of Ronnie or of Jordan, they will be up the back in that area up there. Please feel free to go and ask them as many questions as you like. And we hope to see you at the Gold Symposium tonight. Michael, one of my team members, is out the back there. He will be giving a special offer for everybody in the room here tonight. It's a special offer through ABC Bullion of $250 to come to the Gold Symposium, which is a very, very good price for 2 days of listening to some of the best speakers in the gold industry. We've also got a couple of representatives from LJ Financial, Duncan and Charlie. They'll be up there. They can talk you through if you've got any issues with self-managed super funds, you want to know how to open one. And also the ABC Bullion team are here, and I'm sure they'd love to talk to you about gold and silver. Ladies and gentlemen, that's it from me tonight. I thank you for your attendance this evening. Go out and make sure you preserve that wealth. Thank you very much.